Hi everyone, I'm Dan White, and I hope everyone had a great Valentine's Day yesterday with their spouse or loved ones. And of course, we are all still a little bit in mourning over the Super Bowl. Our Eagles put up a gallant effort. A lot of people think we got robbed, but bottom line is it was a great game, and we just came up a little bit short. And as we are all well known to say in Philadelphia, we'll get them next year. Everywhere I go, people are asking me, what are your thoughts on the market? Is it over with? Are we going back up now? Are we in a new bull market? We know what happened last year. The Fed had the fastest rate hiking cycle in history, and the markets dropped, both the stock market and the bond market at the same time. It was one of the worst years for the 60-40 portfolio in history. But since October, the market has actually risen about 15 to 20%. So it's on its way back, and everybody wants to know, hey, is it time to jump back in? And I came across a couple articles. One was from investment bank J.P. Morgan Chase, and they said that retail investors' stock market orders as a percentage of total market value reached 23% in January. That's a new all-time high. So people are getting back in the market in a big way. And I'm not sure if this is the right time or not, because another article that I came across was very interesting. They say history often repeats itself. And when you look at this article, it says as of the end of January, the NASDAQ 100 was up more than 11% for the year, 11% in a month. That's the best January start for the NASDAQ since 2001. So it's great news for the bulls, right? It's time to get back in. We'll see if this sounds a little familiar. In 2000, the year the dot-com bubble popped, the NASDAQ 100 finished the year down 39%. But in January of 2001, the month that echoes this one, the NASDAQ surged to a 10.7% gain. And yet, by year end in 2001, in spite of that very hot start, the NASDAQ declined 21%. And adding insult to injury, in 2002, the NASDAQ declined 31.5%. Its third brutal down year in a row, and it kind of wiped out everybody who bought the dip until all their money was gone. So the pattern should feel familiar, because in 2022, the NASDAQ declined 33.1%. That's a fairly close matchup to the 39% decline of 2000. So if the pattern holds, then the NASDAQ's current 11% surge is an omen, not an encouragement. And if 2022 is analogous to 2000, and 2023 is starting off like 2001, kind of with a face-ripping tech rally, that implies 2023 could finish like 2001, probably down more than 20%. So I'm not sure that we're out of the woods yet. It's kind of a weird economy right now. I mean, we're seeing layoffs, big tech layoffs with Amazon, Microsoft, Walt Disney just announced layoffs. At the same time, inflation numbers came out yesterday, and inflation's not going down as quickly as they'd like. So the Fed could continue to hike rates. So I think if you're up a little bit in your account, it may be time to consider taking some risk off the table at this particular time. A couple other things I want to mention. We have our referral event all set. It's a Phillies game. We're going to rent out a box at a Phillies game on Monday, May the 22nd. So again, the way our referral events work, you just have to refer a family member or a friend. They have to come into the office, or you can bring them to a seminar. By doing that, you will get a ticket to the referral event. So keep that in mind. We're also asking all of our clients to give us a Google review. We're trying to up our rating on Google. So if you have a Gmail account and you can go online and give us a Google review, we'd really appreciate that. And also follow us on Facebook. If you're trying to find out what's going on with the company, we're putting posts up on our Facebook page just about every day. So if you'd like to find out what's going on at Dan White & Associates, tune into our Facebook page. I hope everyone has a great day.